Hi there, it's Gordon here again, and this little recording takes you through the tax breaks associated with an enterprise investment scheme investment. So, what is EIS relief all about? When does it apply? And perhaps, first of all, why does it apply? It is an attempt by the Treasury to encourage people with some money to invest their money into a fairly small company, the type of company that finds it difficult to get venture capital. And there are, three different venture capital reliefs that are heavily examined: EIS, Seed EIS, and then Venture Capital Trust. We're looking here at the Enterprise Investment Scheme, the EIS tax break. So when does the relief apply? Well, you need to have a small, unquoted trading company that is issuing new shares. Now, you might then wonder, what do we mean by small? Well, it's going to have gross assets under 15 million. It can actually go up to 16 million as a result of the share issue, but less than 15 million before the share issue. Can't have more than 250 staff. And it's got to be a fairly new company. Got to have been trading for less than 7 years. The shares are going to be issued to somebody who is unconnected to the company, because the Treasury have the view that if you're connected to the company and you've got money, you'd probably put it in anyway without a tax break. So they're looking for people who've got no more than 30% of the shares in the company and who don't work for the company. If you fail either of those, you can't have the tax break. Now, what is the big tax break? Well, there are actually a few of them, but the first and the most significant is you get a deduction from your income tax liability, when I say you, the investor, equal to 30% of the cost of your shares. This is a deduction from your tax liability. There is a capping. The maximum amount that you can spend on EIS shares and get this relief is £1 million per annum. The tax relief can be given either in the year you buy the shares or in the previous year. The deduction can reduce a tax liability. It can't generate a refund. So you've got to check what your liabilities for income tax are in the current and prior year before deciding how much it's worth spending on EIS shares. To keep that tax break, you've got to hold the shares 3 years. If you sell the shares within 3 years, then that income tax relief that you had when you bought them is taken off you when you sell the shares. But if you hold them more than 3 years, you keep the relief. Now, what about capital gains tax when you sell the shares? Well, if you hold the shares for less than 3 years, which, remember, you don't really want to do, because then you've lost your income tax break. Another reason why you may not want to is the disposal is chargeable to capital gains. So you sell at a profit, you get a capital gain. You sell at a loss, you get an allowable loss. If, however, you hold the shares for more than 3 years, then the Treasury are phenomenally generous, because any gain on sale, if the shares have gone up in value, is exempt from capital gains. But if you do happen to sell at a loss, they do allow you your capital loss. Then finally, with EIS, there's a capital gains deferral relief that goes hand in hand with the income tax relief, and it's called EIS reinvestment relief. And it applies if you sell any asset at all at a chargeable gain. Doesn't matter, no restrictions. And then you buy some EIS shares. There is a 4-year window in which you must buy the EIS shares, starting 12 months before the date of the disposal that led to the gain, and ending 36 months after the date of disposal. If you're in this position, you can claim to defer any amount of gain, so it's flexible, you don't need to do all of it. So in particular, you can leave gains in charge to use your annual exempt amount. You can defer any amount of gain up to the cost of the EIS shares. and that gain only becomes chargeable when the EIS shares are sold. It will eventually become chargeable. This is only a deferral, but one of the principles of tax planning is you would rather pay tax later than pay it now, and that's what this relief allows you to do.